very excited to be here. I think this is going to be a fascinating discussion with these investors on AI investing at its infancy. I think the titling is great because what I'm seeing in the marketplace is huge risks, but also huge rewards. So we're going to dive into it with the panelists. I think one thing to note is I do a lot of data-driven reporting from the Crunchbase data set. And what we saw in 2024 as it relates to AI is almost 100 billion, a third of global funding, 45% of US funding went into AI-related startups. And I think what was interesting is halfway through 2024, there was a sense that too much money is going into AI, but it actually went up massively over 2023. So up more than 80% from 2023 at around 56 billion. So more dollars this year. It's going to be interesting to see 2025. Are we going to see more funding going into the AI sector? So I think to kick off, what I'd like to do from each of these investors is understand what stage you invest, your check sizes, and also just for 2024, how many new investments were AI-related versus not. So Arif, do you want to kick off?
Yeah, sure. Hi, everyone. My name's Arif. I'm with Bain Capital Ventures. It's really great to be here. What an incredible event. So we invest from seed to Series C. That means typically investments of anywhere from $500,000 up to 50 million. We make about maybe 15 to 20 new investments a year, including seeds. They're mainly clustered in San Francisco and New York, where we work. But every now and then there's something outside of that. And when I think back to last year, outside of maybe 2 investments, everything was related to AI.
Got it. OK, Cassie.
Hi, everyone. I'm Cassie Young from Primary Venture Partners in New York. We are a seed fund through and through, so investing out of our 4th fund today, but manage $1 billion in assets under management total. Our average check size is $5 million, so we're typically leading these seed rounds when we invest. And our model is that we're specialized by partner, so we have 6 different lanes that we focus on. We did 14 deals last year, which interestingly were a mix of founders we met in the market and then homegrown incubations. Similarly, all but 2 were AI native. The other 2, of course, have AI components. But I will assure you that 100% of those incubations were AI native, right? Which kind of gives you a lens of where we're seeing things play out.
So can I just ask, you're doing seed 5 million seed rounds?
That's correct. Yeah.
And has that been true for a long time, the 5 million?
It certainly has changed. Okay. It certainly has changed. So the seed rounds, we've all seen are certainly getting larger out of the gate. And as I said, because we do lead these rounds, there's often instances where that will even flex up higher than that.
Got it. And RF seed rounds for you are also around the 5 million, or do they range?
No, they could be smaller. So it'll be kind of 1 to 2 million up in terms of round size.
Got it. OK. Lee Marie.
Hi, everyone. I'm Lee Marie. I'm a partner at Kleiner Perkins. At KP, we're a generalist fund, and we're also multi-stage, so pretty flexible when we partner with companies. I'd say me in particular, I'm mostly focused on seed to Series B, but we have a growth fund as well, and so can kind of have the flexibility to do really most check sizes. So we're deploying out of a $800 million venture fund and over $1 billion growth fund. And a little bit about my background. So I've been at KP for 2 years. Was investing at Founders Fund, another fund before. And then before that, I was one of the first engineers at Scale AI, and then a product manager there. So I've been excited about AI for a really long time. Back in the at the early days of Scale, it was mostly computer vision, and we were providing data for self-driving car use cases. As for kind of our investing, sort of as it relates to AI, me personally did 5 investments last year, and all but 1 were totally AI related, and even the one was a fintech company that will inevitably use AI to reduce cost internally. So yeah, pretty AI focused, and that's pretty representative of other KP investors as well.
So were you saying Series A is sort of where you start off? So you're more
seed to Series B.
Well. Okay.
So I have a few seeds that I work with, and a few Series A and Series B.
Got it.
Yeah.
OK. So what I'd love to hear from the 3 of you, and you're all quite different, and I think in different markets, is what do you see? We're 2 years in to the sort of generative AI moment. Things seem to go very, very quickly. Like within a 2-week span, you'll see new things come out, and then there's sort of this lull, and then things come out again. So what are you seeing 2 years in for where you're seeking to invest? So Lee, let me kick off with you. Like what's interesting to you?
Yeah, so it's only been about 2 years since with that ChatGPT moment when ChatGPT came out and kind of blew everybody's minds, mine included. Yeah, I think 2 years into it, we're seeing what I like to call the battleground spaces. So these are spaces where there's clear product market fit, multiple startups going after the opportunity. So I think of these like the cogen space, so the AI developer tooling, customer support enabled with AI, sales, legal, medical scribes even. There are multiple startups here. It's clear that the tech works for the use case and provides a giant amount of value to the end user. But it's still very competitive, and incumbents are also in the race, so like kind of across the board. So that's like what I'm seeing in terms of the things that clearly have product market fit, the applications that clearly have product market fit. Obviously, a lot of the model companies very clearly have product market fit as well, and some of the infrastructure companies, especially on the compute side. And then there's kind of emerging spaces that we can talk more through maybe later.
Got it. Okay. For you, Cassie, where are you quite excited right now?
Sure. So maybe I'll talk about this. No. Oh, here we go. Okay, perfect. Maybe I'll talk about this sort of in 3 broad-based buckets for us. So I think the first thing is any really compelling founder that's building in a large market is going to be fundamentally of interest to us, right? And I think one of the biggest evolutions for us over the last 2 years is just how do we think about the founder profile in the battleground territory, right? And who really has the right to win where they're building. So that's kind of a blanket statement where irrespective of the industry lane or the application, there's a path to be excited. I think more specifically, we are thinking about businesses where it makes sense for there to be a domain-specific application. So for instance, I'm an investor in a supply chain decision science company called Lyric. If you look at predictive analytics for supply chain, 70% of that work is operations research domain expertise. And so we like an enterprise-specific AI focus for that. And then the final thing I'll say is that we're spending more time just thinking about infrastructure more broadly. I think we look at the DeepSeek news, we look at what's happening, we know demand is only going up. And so increasingly we're spending just significantly more time thinking about the infrastructure layer.
Got it. And Arif, for Bain, where are you focused?
Well, I think, just building off what's been said, the conceptually obvious ideas and areas are now covered. I mean, at this point, if you were to try starting a cogen company or a customer support company or something, as Lee Marie was mentioning, I think it would be pretty tough, to be honest, given that you'd be coming from behind relative to a bunch of very strong teams. I mean, there are a whole host of very strong teams in all of these areas. So I think the question now is, what are the non-obvious applications and things you can do with AI? And there's still a huge number of those, mainly because the capabilities of models continue to advance. And so what you have is you have this kind of shifting forward frontier, particularly around what's called reasoning and the model's ability to fully automate things and perform tasks, which I'm sure we'll come to. But there's that, and then what that does is it shifts software into new domains and into new areas that it hasn't been before. So when we're looking at things, we think about, is this a greenfield market? Can you really expand the market for what software can do by going into an area where maybe there's a service provider, maybe it's an area that hasn't really made sense in the past because it's been a small market or a difficult market to access. EdTech would be an example. I can say that in the past I have definitely had unsuccessful EdTech investments. We now have a company, Magic School, that's growing very quickly, making lesson plans for teachers, and just with revenue growth that's unprecedented for this area. So because of these advancing capabilities, there are now a bunch of non-obvious markets that you can apply AI and non-obvious problems you can now tackle. And those are the things that we're looking for.
Got it. And is there an investment you can highlight that you're a company that kind of symbolizes that or represents that for you?
The non-obvious. Well, I mentioned, Magic School is an example. EdTech has been a very difficult area historically. I mean, it produces lots of value, but it's very hard to actually get paid for that value because you're selling to schools or school systems or what have you. Magic School creates lesson plans for teachers, and then through that connects with parents, and it's just been kind of transformational in a range of bunch of schools. The founder was a principal at a school in Colorado, knows the domain incredibly well, and so you have this not necessarily a native technologist, but a true domain expert solving a problem that in the past wasn't possible to address, and a company growing very quickly. So that would be an example of a non-obvious company, an obvious or an area in an obvious space. I would say Decagon, which is speaking earlier, talking with Hertz, one of their customers, where customer support like cogen is a total no-brainer for companies to use AI for. You have high cost, you have low customer satisfaction, you can improve both of those, you have lots of data for post-training, and you can very quickly show a ton of value with 90% plus ticket resolution rates. So that would be an area that has been built out and is, just such a clear and compelling use case.
Yeah. Cassie, for you, is there a company or two?
Sure. So I mentioned one of them before when we think about the areas where we believe domain expertise can be really important. So the supply chain business I mentioned earlier, Lyric. But I actually will pick another one based on your comment around the battleground, because there are many categories that are very crowded right now. And at Primary, anything that touches the go-to-market stack tends to land on my desk because I'm a former software chief revenue officer before coming to the investing side. And that's a space where we say AI just makes us exhausted with the number of point applications that are there. But we're investors in a company called OneMind that's building photoreal avatars for go-to-market teams. And the reason I like to talk about that one is they do have amazing traction and momentum out of the gate, but I think it comes back to my earlier comment about how we think about founders in this climate, right? And the founder of that business had previously started a company called 6 Sense, right? And so we have this term we use a lot at Primary called who are the zero CAC founders in a category who can help them with a running start that's going to accelerate what they need to do. So I share that because it comes back to my comment of even in the categories where it seems really battlegroundy, I think there's still room for great players to emerge.
Got it. And Lee Marie, are there some investments you've made that you're excited about?
Absolutely. In terms of the sort of more obvious or more like scaling spaces right now, I work with this company, Codium. Some of you might know them by their recent product name, Windsurf. They are an AI-enabled developer tooling platform, and Windsurf in particular is an agentic IDE. So this is a developer environment where you can write code. Not only is there sort of an AI autocomplete, but also there are these agents that you can go and have do your bidding across a variety of small tasks as a developer. And this is just really kind of caught fire. What in particular is very special about this team, they are infrastructure experts, and I think when you're dealing with just like the amount of data, like the size of code bases, and you really want good context so that these agents work more reliably, you just kind of need that sort of infrastructure expertise.
And the company name again is?
Codium.
Codium, okay.
But you'll probably know them by
Codium,
Windsurf.
yeah.
And then I kind of like this framing of like obvious, non-obvious, because even if you froze the models, where they are now, and that's not happening. They're clearly getting much better, much cheaper. There's just so many domains where we're just at the tip of the iceberg and in terms of what these models can actually do for the industries. So I'm really excited about this one particular investment. We haven't announced it yet, but they're in the space of automating knowledge work for biopharma and biotech companies. So I didn't realize how, before I met this founding team, big the life sciences consulting industry is and just how much repetitive work kind of goes into that these models can augment or even automate today. And so, I'm very excited about continuing to sort of these non-obvious areas, sort of with founders with very earned insights into very particular spaces.
Yeah. I must say, I find it very challenging to think of new things or new spaces just because I've been in tech for so long and you keep feeling like you're seeing the same companies. So it's interesting as an investor exploring, like, where is their traction, where is their product market fit today, and then where is there very new things happening. And I guess that's the challenge in investing, is finding...
Yeah, I mean, ideally, there's not traction at the time that you're investing, but you come across a founder who has a thesis around a market where you feel that they have the right product to unlock this latent demand. So that's what's really happening now, is that there isn't an existing market until the right product comes along, and then suddenly, boom, it surfaces all this demand that was there.
That's fascinating. So one of the interesting things I picked up around the panel, I saw Kevin Weil from OpenAI speak, and he was talking about defensibility for OpenAI. And you look at OpenAI and the billions they've raised, and they're worth more than 150 billion, and they have to answer the question of how defensible is their technology and what they're doing. So I'm wondering, given how competitive tech feels at this moment, how you're thinking about defensibility. So Cassie, do you want to kick us off?
Sure. I mean, I think... I'm on a lag with the microphone. There we go. I think the headline here is this has evolved tremendously even over the last 60 days, right, as we think about how things play out here. And so when we think about defensibility, we know that it's challenging in many of these categories. And so one of the things we are thinking about, and it goes back to my point about these founders who can go to market quickly, is who can actually accelerate their customer use cases fast enough that they start to amass compelling data in quickly, right? Because we all hear the incumbents have the distribution advantages, et cetera, and that's always going to be true. But I think for the upstarts, what we're thinking about is, what can they do swiftly that ultimately enables some sort of data moat, right? And a lot of people will say, well, the tech is totally interchangeable, it's not defensible, but what we see, like if I pick on that business that I mentioned before, OneMind, that's a company where they will be deployed on large public companies' websites, right, and basically taking the place of a BDR. And what's really fascinating about what's happening in AI right now is they've kind of gone on this journey where they're using reinforcement learning to do that, right, where they're saying, we don't need your historical data, right, we're going to come on and we're going to train the AI to a certain outcome. So maybe it's signing up for a starter package on your website. That works reasonably well. And the faster they can do that and the deeper and deeper they can go into the use cases with these large enterprise companies, that starts to become not just a data moat for their business, but it also makes the switching costs for their end customer really high, right? Because at that point, the end customer is kind of not necessarily owning what's going on there. And a year and a half later, if they've fine-tuned the way to use the AI to drive up those conversion rates, that's a harder switch out. So we're really thinking about it in terms of just the depth of those use cases and the ability, again, to do that reasonably quickly.
Got it. Lee Marie, what are you thinking? How do you approach defensibility?
I kind of approach it the same way that I would with any other type of investing. I love this framework. I talk about this book all the time, but 7 powers, which basically goes through the sorts of different moats that businesses have. And I think right now, kind of as Cassie was saying, we're so early into this, and we are seeing every week like new ways of building products with these models that are just kind of unimaginable the week before. And so things are changing very, very rapidly. I think what ends up happening is, you see a lot of startups getting a ton of traction, and then the hope is eventually they'll be able to grow into one of these powers. So whether that's, like network effects or switching costs, like I think there's a great argument you can make around eventually the models will get so good at predicting your workflow and your personalized workflow that you won't want to switch from one application to another because this one knows you really well. Things like brand, I think we're seeing with OpenAI, it's just become like this consumer AI brand that's really powerful. So, I think you kind of have to take a step back and think of it from first principles. But in reality today, a lot of this is like changing very fast, and hopefully over time there will be some more concrete moats that these companies develop.
Got it. Arif, for you, are you seeing moats in this sector?
No, I think there are no moats. There is no defensibility, certainly at early stage. I mean, even if you're OpenAI, you have to answer this question because of DeepSeek, which comes along 10 days after you do your big release. So I just feel there are no moats. And so asking about moats at early stage, for early stage investments is just, it's just an impossible thing. What you can see, as Cassie was saying, you can gauge the quality of the team. You can, and I'm sure Lee Marie looks for these things too. You can see the product velocity of a team and how fast they bring stuff forward. And you can kind of assess whether founders have an aesthetic or taste or an intuition for their end user. And if you have those two things, then that is an advantage. Because if you can get things to market quicker and those things are more in tune with your users, then the only thing you have in a world of no defensibility is just to bring things to market faster and continually, because customers and users will recognize that and will want to associate with the people who are giving them the latest high quality thing. So if you can be that team, that's the rare thing, the difficult thing that users and customers will gravitate towards.
Yeah,
I love to ask founders, what is your head start? Because I want you to be aware of what's going on, especially in one of these kind of like battleground spaces. But then, even if you feel like you're in front right now, you have to assume that your competition is rational and smart and not just doing silly things for no reason. Yeah. So if they were to get their act together and start to copy you, how long would it take? And how far could you be in front of them before that happens?
And I was actually going to make another point on that, which is with your head start, how are you really defining that head start? Because I actually think traction is a huge red herring right now, right? There was, Jamin Ball wrote this piece about a year ago on the conundrum between ARR and ERR, experimental run rate revenue. And then I just read a report a couple weeks ago that was saying that 60% of generative AI purchases are coming out of innovation and experimental budgets. So I see that and I'm like, just churn red lights everywhere. And so I think that's just another interesting thing we're thinking about is it's not insurmountable to grow the ARR quickly, but what's next, right? So even the head start makes me nervous, which is why I would say it's the depth of the customer use case that has me most intrigued to really understand where you're going to drive, durable stickiness.
Yeah. So what do you think's defining, you all invested sort of through the cloud era, and I was just thinking today that the last sort of wave of innovation, which was mobile and cloud, was kind of 20 years ago, was the start of that. So we're 20 years deep into that, and then AI came along just as funding was kind of retracting and seemed to give a sort of new boost. So what's different about these companies versus the last cloud? Are they bootstrapped? Are they getting to market earlier? Are they different? Like, what do you see as fundamentally different about these startups versus what you saw in the previous era or 2 years ago? RF, what do you think?
I mean, it's a great time to be a founder. I think companies need less capital because you can do more with smaller teams. There's more capital available because it's flooded in, so valuations are all higher, which makes our life more difficult, but is great if you're an entrepreneur, because you just have, especially at an early stage, you have much easier access to more capital relative to what you need to hit milestones. And so you see that when you look at what's needed to get a Series A. So before it would have been, if you've got a product out, or if you have $1 million in ARR. Whereas today we're seeing seed teams that can make much more progress than that off seed. And it varies by space. There's no one number, there's a magic number, but very often they can grow revenue more aggressively early in the company's life.
Yeah, and are you seeing, I saw a lot on Twitter about companies who've got to sort of velocity, smaller teams within 2 years, they got to 10 or 20 million in revenue, which is sort of unheard of before. Are those the outliers?
They're outliers, yeah. I mean, there's no expectation of 10 to 20 million in revenue within a couple of years. There are extreme cases of sometimes teams that have been working for a very long time that, there's one team in particular that they'd been working for years on something, and then suddenly it took off and they went from 0 to 40 million in 2 months. That's not the norm. So that's not necessarily what I think people would be looking for.
Yeah, and Lee Marie, what do you see that's different about this wave of startups?
Certainly, I mean, in many ways, like just less predictable and straightforward than the past waves. I think, there's just a lot of uncertainty around exactly how all of this is going to shake out, and will there be sort of like, lasting moats and things like that. I do think, however, just the amount of demand from consumers, from enterprises for this technology, and the amount of real proof points of sort of the intelligence paradigm shift that's happening is just, unprecedented. And so, yes, these are sort of outlier companies maybe that are, doing these kind of crazy revenue ramps. And you always have to be very careful about what you actually count as revenue as an investor. But I mean, it's clearly happening. And there's this whole phenomenon that I think someone has dubbed seed strapping, of like companies that will raise seeds, and then because like AI allows them to be much more efficient internally, and there's such a demand for their products, don't need to sort of raise as much capital down the line. So. I mean, certainly a lot of things that we're seeing that are new.
Yeah. And Cassie, for you're doing enterprise investing, is that correct?
Personally,
and so are you seeing a lot of demand for new seed solutions? Is it more on the infrastructure side of AI? Because there's a lot happening, and there's, I'm talking to a lot of companies which are making it this much faster, or they're tackling it in a slightly different way to help enterprises. So is it the infrastructure, or is it more applied solutions?
I think it's both, but I think one thing we talk frequently about is that technical teams and use cases are very much still the hero use cases. And I think people are talking about it elsewhere in organizations, but that eyes are still very much bigger than stomachs. And I was at a dinner the other week and was talking with an executive from a very well-respected public company on the go-to-market side of the house, who told me that up until 60 days ago, it was a circus internally to get anything approved to use AI, right? And so I saw this, and I'm like, this is a company that people talk about, right, in terms of being very tech forward. And yes, their engineering teams are using it, and there's a desire to do it. And so I think it comes back to this, what's happening in the buying cycles is that, I think people are calling it pilotitis, right? Everyone is, willing to try stuff, but a lot of these organizations actually don't even yet know how to buy AI, right? Every other week, they're changing their own policies for what that looks like from a procurement perspective. perspective. So that's certainly something that our companies are monitoring and figuring out how to maneuver.
Yeah. So is this a big opportunity for the consulting firms and new consulting folks coming in, or is it these infrastructure companies who are becoming almost these consulting arms in building out their services? I don't know, RF, if you have a point of view.
It's kind of both. It's sort of a free-for-all right now. I mean, if you're talking about selling to large companies, for large companies, you want to sell AI top-down because you're replacing workers, you're not supplementing workers, and it's really managers and executives who think that's a great thing. And so there's sort of a process change element to it. And so who can do that? Well, definitely consulting firms can advise on it in certain situations, and they're certainly trying to do that. Or technology providers can provide not just the technology, but also the methodology and the wherewithal. And that's a model too. A lot of those providers, though, have to develop that muscle. It's not something they're familiar with. I mean, there are technology companies that do this really well, Palantir being an example, but many of them don't operate in that way. And so I think it's an opportunity for both, just because it is such a gigantic wave.
Got it.
I do think one thing that we've observed is there is this desire within large organizations to democratize access to AI, right? So even this is an internal debate we're having a lot about Palantir, right? And where does Palantir exist versus where do the enterprise AI use cases leapfrog them? Because at the end of the day, if you're Coca-Cola and you're working with Palantir, at the end of the day, Palantir owns those models, right? And so I do think the power of AI has a lot of people in these organizations thinking about what that looks like. So I'm actually very keen to see what happens with the consultancies.
Yeah. So I'd love to switch a little bit to agentic AI. So we've heard at this conference 2025 is the year of agentic, that it's coming, it's this year. So I'd love to understand from each of you, so this is early, this I assume is a greenfield, because there's new things coming. What is it, I guess, because it seems very dispersed in terms of the explanation. So what is agentic AI, and is it coming, is it here, or is it coming this year? RF?
Well, maybe. Why don't you take stars off?
Oh, defining the word agent. All right. The way that I think about it is it's more proactive, more end-to-end AI. I think there's, definitely people on Twitter or X that will tell you, this is agents are here and they're coming for your jobs, and you can hand off any task to an agent today. That's wrong. That in that sense, agents don't work in terms of like the sort of let's automate every single end-to-end task. What they do really well today is we can go back to the Codium windsurf use case. They can take on increasingly complex end-to-end software development workflows. So for example, I work with another company and they have a sales team, and they've actually used Windsurf to build sales software tooling and then canceling sales software subscriptions over like hundreds of thousands of dollars. So, I think in terms of where agents really work today, that's definitely one use case. And then, as you start to go into other sort of like text-heavy areas, smaller and increasingly larger tasks.
Yeah. So do you think we're here yet, or it's slowly? Well, not yet. You're saying.
I think this year we'll continue to see more and more reliable agents. However, I mean, and to be fair, I'm a little bit biased. I come from the world of self-driving cars. During my time at Scale, I do think it's going to take a really long time to get to the 99.99% reliability for agents across every use case.
Got it.
Yeah.
Cassie?
I agree with everything that's been said, and I think at the end of the day, it comes down to trust, right? And so agents are here, but what use cases do you actually trust them with, right? So even if we look at the world of sales or customer support, you see, okay, well, we'll go to sort of our least valuable or least consequential customer segments first, because it's lower risk if they mess up in some way. But one interesting thing is there's a founder we work with in the portfolio who said, some pushback she'll get on AI implementations as well, it hallucinates. And she had this great line that I always love to repeat, which is, well, you show me a software salesperson who doesn't hallucinate, right? Which I think is a reasonable way to think about it. But I do think it really comes back to it's here, but we're sort of early on the maturity curve. But so much of that is that trust factor and, what are the consequences of the application that you're deploying it toward.
Yeah.
Yeah, I don't know, maybe I'm a bit more optimistic. I feel like, I think of agents as being two things. It's reasoning capability combined with tool use. So it can, quote, think or figure out what to do, and then it can actually take an action using a web browser or something. And we're not quite there, but we're on the cusp. And tool use isn't so complicated. The reasoning is complicated, figuring that out, particularly in a reasonable time, because you can't give the model, too long, otherwise humans get frustrated. And so it's working today in specific domains, as Lee Marie was saying. I mean, I think of it more as code completion, inline code completion, so kind of specific areas as opposed to full agentic use cases. Customer support is a limit. It's like a limited set of things, so it can fully automate a limited set of things. And it just looks inevitable. If you look at how these models are progressing, particularly with this emphasis on test time compute or giving a model more resources at inference time, it just looks like, I don't know if it'll be this month or this year, but it won't be 3-4 years out, that the models will be good enough to really figure out what to do and take a series of actions, at which point everything we think of as a software application basically becomes an agent. Because why would it not? It's just better. The hamburger menu goes away. You don't have to click all the time. The thing will figure out what to do likely with a much more simple UI. And so that feels almost certainly where we're headed, and it's just a question of when.
Yeah. Did any of you look at the Manus announcement and see some of, it looked pretty compelling to me, some of the use cases. Obviously, too many people signed up and it sort of got caught up, but you can see these things seem to leap pretty quickly. So I'm just wondering, Arif, obviously you have, and I'm sure Kleiner does as well, as you, and even Cassie, you probably have companies who are further along, who are still private, but have raised in the boom times of 2021, are large companies. I feel like there's this big disruption where all of these companies are having to relook at who they are and what they are. Some of them are disrupted more by AI because what they were doing, there's a new class of tools that have come in and they have to rethink what they are. And then others, it's they're amending or adjusting. And then you see all these new startups sort of coming in. So how do you think about the incumbents that you've invested in and their advantages versus these native new companies who are coming in and looking at things in a very, very different way? How do you kind of see that in your portfolio companies?
Yeah, I mean, I'd say for companies that started just before Gen AI, it's really tough. I mean, if you think of a company that started in 1919 or 2019 or 2020, first they had a giant boom, then they had a bust, then this platform shift comes along. I mean, I feel for them. It's just rough when the kind of ground underneath you is shifting so much in that way. And I think the reality is you just can't ignore it. You can't put your head in the sand and say, I started this company with this plan in 2019 and I'm just going to continue with that. I think you have to take a step back and think about, in light of what's happened with AI, what are the implications and how do I move towards that? And there have been teams that have done that very successfully. I'll give one example, which is a company we work with since Series A and Kleiner was also involved with at Series B, which is called MoveWorks, which really had the right vision around IT service management, but was a little ahead of its time. And then LLMs came along, and it really rode that wave. And this week, ServiceNow acquired the company for a little under $3 billion. So we've seen teams do it, but it is hard.
I would say at Primary, we live in fear of the founder who has this amazing vision, but then accidentally ends up building the horse and buggy version of it, right, because of what's happening in the world of AI. And so it's interesting, we just had our annual LP meeting a few weeks ago, and we did these 2 side-by-side panels that I thought were really interesting. We had a handful of founders that we've invested in the last year that are AI native businesses, and then a handful of founders from Fund 1, which is a 2015 vintage, who've had to really adapt to AI, but have done it in compelling ways, like companies like Alma in the mental health space and what they've done there. But I think what's important for these companies is just the wake-up call, right? And when we said before that everything you read about, Midjourney going to 200 million in 2 years with 15 people or 10 people, whatever it was, that it is an outlier, I do think it's this amazing inspiration point for teams that are a little bit more mature, right? Last week, a colleague of mine passed around this leaderboard that was going viral on LinkedIn that was the Lean AI Native Leaderboard, and it showed the revenue per employee of different companies, and Midjourney was $12.5 million per employee. Now again, that's a crazy outlier, but it just gets these businesses thinking about it. And so the best we can do is say there's really 3 different ways that AI are going to play into your business. One is the product, right, and how you're going to delight customers with these magical experiences. services, but then it's even your internal processes. What can you do to like do quarterly business reviews faster? And then there's the people component of it, right? And I do think people are thinking about it in the right way. There's a founder in our portfolio who just told us this story that she challenged her employees to say, if you find a way to automate out your job with an AI, I will automatically forward vest all of your unvested options, right? So what are the aligned incentives to get there? So I do think people are thinking about it. Yeah.
I agree with all of that. I think the things that I'll add is what's really interesting is a lot of the like Gen AI darlings of today were started before ChatGPT came out. And so it's companies that were just very good at incorporating the existing technology into what they were building. So Glean, for example, started multiple years before ChatGPT, but was able to really take advantage of the technology and supercharge the enterprise search that they were doing and grow into, you know, one of the companies you think about when you think about generative AI applications. Ambience, which is another company that we're involved with, which is a medical scribe, so helping doctors, you know, automatically transcribe meeting notes and things like that, was also started before kind of this sort of latest tech came out, was able to incorporate it really well and grow. And then separately, two of the companies that I work with, both Codium and this company Nooks, which is an AI assistant for SDRs, both of them were the result of pivots. So pivots after seeing just what this tech could do, and then sort of their particular expertise and moving into different application areas.
It's interesting. I've been walking the show floor and talking to companies, and a lot of companies are saying we were founded 2016, a lot saying 2019. Some of these are further along. They're not the earliest seed. But I also did hear from seed stage investors, you know, when the crash or the pullback happened and after 2021, when everyone was investing at a pace, where they said we're probably going to write off most of our 2021 seed investments. And I was like, whoa.
That's a bit dramatic.
Yeah, that's a big
We're calling
shift.
them the late bloomers.
Yeah. So these companies, you think, as AI is, so that was pre sort of AI or AI. So maybe with AI, do you think some of these seed stage companies from 2021 have been able to pivot? And
I think so, and I think it's a lot easier than if you're a growth stage company in 2020, 21, and you massively expanded as everyone advised you to do, including every investor, and then suddenly demand cratered because of the macro, and then you had to lay people off. I think that's a lot harder situation than what these seed companies are in.
Yeah. So I just want to ask, and I know we're getting to the closing points, is just, are there metrics you're looking for? I mean, this is early stage. So for seed companies that come to you, are there no metrics? It's just you believe in the founder, what they're attacking is great, they have experience or no experience sometimes. What are you looking for from on the metrics point of view, or are there none?
I mean, it's honestly pretty similar to, you know, how you would think about SaaS metrics in my mind. I mean, at the seed stage, in general, you know, you're really betting on a person, and you know, talking about all this pivoting and just how dynamic this whole industry is, and how there's a new model or trend or incumbent doing something every day. A lot of what I'm looking for when I'm investing at the seed stage is this founder going to be able to adapt and be really dynamic and you know, adjust in the ways that they need to win a space. And then at the later stages, I mean, depending on the particular market, you might care a bit more about growth versus efficiency. Then obviously, as you scale up, efficiency becomes a lot more important. But yeah, nothing too new to add here. I mean, infrastructure costs are obviously higher, given just kind of these models.
Yeah, and I think I agree with that. You know, at Seed, obviously, the founder is such a huge part of the story. I have a partner who uses this term that I really like for AI founders called next level missionaries. And I love that framing because I think it underscores the importance of customer obsession in the category they are building in. And going back to our earlier point around like the right to win, and especially in crowded spaces, I think that's really important. So that's really something we're just spending more time on, is that founder assessment up front. I think, you know, we stay with our portfolio companies as they grow and scale and reinvest as they hit Series A, B, et cetera. And what we're thinking about then, and I sort of alluded to this before, is the depth of the customer use cases. Like the ARR metric makes me a little bit of a nervous wreck right now, right? And many of these companies won't have the luxury of net dollar retention rates, right? Or 2 or 3 years worth of churn data. So what are the leading indicators that we can look at, right? So leading indicators would be, okay, they landed one use case and they have evidence of land and expand early on. Better yet, you know, we can talk to these customers and really understand how ingrained they are in the work streams. But I do think like customer success is going to have its moment and everything that's coming on here, because there is just so much, you know, trial going on, and it's not necessarily going to be durable ARR.
mission critical use case.
Arif, any metrics?
I mean, I agree with that. It's less metrics to seed, as Lee Marie and as you were saying. But the only thing I'd add is that is true at seed and at the beginning, but very soon metrics start to matter. And even at Series A, people want to see the beginnings of, what is revenue looking like, and what does retention, to your point, what's the quality of that revenue? And then certainly by Series B, it's a pretty high bar on traction and momentum. And so I think you get a pass at seed, as you should, as founders should, but quickly you need to be telling that story. So you need to be thinking about all that from the very beginning.
Yeah. We're seeing in our data set where there's been more of a drop-off from seed to getting to A or getting to beyond A. And I think it's because seed has gotten larger and companies are staying longer at seed. So it's going to be interesting to track whether that happens or whether there's a fundamental shift in the market. One thing I'd love to know is are there different monetization strategies? Is it all SaaS, subscription model, or is it usage, or anything different from that? I'm hearing more about usage.
Yeah, I mean, ideally it would be based on job completed and work done.
Yeah.
Because then you're innovating not just technically, but also at a business model level, which is hard for a competitor to compete with. So, take sales tech as an example. If you're going against Salesforce, you don't want to be compared on a per seat basis. You want to say you can have fewer seats and we'll get this level of work done and pay us for the work, or whatever it is. So that is, I think that's the ideal for
That's
an
a
AI
higher
company.
value.
Yeah.
I mean, ideally, we're not just taking away software spend, we're like unlocking some of that trillions of services spend. And so you think about it from an outcome or a usage standpoint. Though, I mean, I will be completely honest, like it's very early. People are experimenting with a lot of stuff. It can change.
Yeah.
Totally agreed. I think the one thing that is interesting for the inventors, right, of these solutions is that I think there's a lot of speculation that as you move away from seat-based or usage-based pricing into outcomes-based, you capture more of the value that you create, right? So historically, if you could capture 10 to 20% of the enterprise value creation that you're driving, can you drive that number even further north, which I think is going to be very exciting to watch over the next year.
Yeah. So I think finally what I'd love to understand from each of you is sort of point the focus back on you, which is how you think venture is going to change within the next sort of 2 to 5 years. Because what I'm seeing in our data is obviously 2021, everything doubled, everything's pulled back. We're not seeing the seed move to Series A as efficiently. We're seeing money pull back because there hasn't been liquidity in the last 3 years. And so a lot of funds have a lot of dry powder, a lot of funds are raising, but it's more difficult, less money is going in. So what do you think the shape of venture is going to look like? Because we've gone through a massive change, and it feels like going forward there's going to be some changes. And it fits with this risk. There's big rewards here, so we see big money still going in, but there's also very big risks around liquidity. So thoughts on venture? You're looking how venture is going to change? Fewer funds, more consolidated?
I don't know. I mean, I think there's now liquidity through M&A, which didn't exist before, and there have been 2 multi-billion-dollar acquisitions in the past week. The public markets are a whole different story, and I agree that puts pressure, but I don't know that the structure fundamentally changes, because I don't know that it's necessarily broken. And maybe not being from the US, I just feel it's amazing that people can just walk into an office, have a conversation, there are a few reference checks, but there's really no detailed diligence. It's really someone's belief in a person is what it comes down to, and there's a lot of implicit trust there, and they can raise millions of dollars with no track record just to go and pursue their ideas. And that to me is the core of what is happening and what we're doing, and I don't think that changes. And maybe a few of the firm name changes, some firms rise, some firms fall, but that core of backing first-time people with no track record to try something that hasn't been done before, that I feel remains there, and there's a strong venture ecosystem to support that.
On that note, I think we're done. Thank you to Teare from Bain Capital Ventures, Cassie from Primary VC, and Lee Marie from Kleiner Perkins.
Thank you.
Thanks all.